Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be doing a brief stock analysis on Visa stock, ticker symbol V. So let's not waste any time and get right into it. So most of you guys probably know what Visa is, but just to clarify based on what they say they are on their investor relations page, Visa is a global payments technology company that connects consumers, businesses, banks, and governments in more than 200 countries and territories, enabling them to use digital currency instead of cash and checks. So I think one of the big things there is that digital part, obviously, and the fact that they're in over 200 countries just gives them a lot of diversification among those many companies or countries they're operating in. And as we're going to see here, they're sort of expanding that worldwide diversification a little bit more. They recently acquired this company, Currency Cloud, which I think is from the United Kingdom or maybe London. Yeah, I think London. So that was just a few days ago on July 22nd. They announced that they acquired this company, and basically, Currency Cloud is a global platform that enables banks and fintechs to provide innovative foreign exchange solutions for cross-border payments. So basically, they're working more on currency exchanges and making it easier to buy and sell things in different currencies, essentially. And I think that's going to help Visa, continue their growth worldwide. And looking at their second quarter 2021 results, which is a bit confusing because the second quarter fiscally for them is January through March of 2021. So basically the third quarter fiscal quarter just wrapped up at the end of June. So I think those earnings for the third fiscal quarter are set to come out within the next week probably. So that'll be exciting to see. But looking at the second quarter, that was released back in April. They say our key business driver growth rates are starting to ramp up, reflecting the depressed levels in 2020 due to COVID-19 and making year-over-year comparisons difficult to interpret. So basically they're saying, yeah, we're expecting that this year is going to be better, so those year-over-year comparisons maybe don't mean as much. Compared to fiscal second quarter 2019 levels, payment volumes and processed transactions were both 16 percentage points higher, while cross-border volumes, excluding intra-Europe, remained 25 percentage points lower. All business drivers were consistent or improved from the fiscal first quarter's results indexed to 2019, and they returned $2.4 billion of capital to shareholders in the form of share repurchases and dividends. And about 700 million of that was in dividends, and about 1.7 billion of that was in share repurchases. And just looking at these numbers for the revenue, about $5.7 billion of revenue in the second quarter of 2021, which is about 2% lower than the year before. And then net income was around $3 billion, also about 2% lower. The GAAP earnings per share was $1.38, which was right in line with the prior year, and then that non-GAAP net income was pretty much the same at $3 billion, and earnings per share non-GAAP was pretty much the same at $1.38. So really not the best results, given that I think we would have liked to see a little bit of an increase, but at the same time, the first quarter, or their fiscal second quarter of 2020, was not fully impacted by the pandemic. The first probably 2 months were, I would say, 100% normal. So it really only started in March of 2020, I would say, or really got a little bit serious then. So, I think that's okay to see. I think, if these earnings that come out within the next week for the third quarter, fiscal quarter, are not much better, then that will probably be cause for concern, or just, taking a deeper look at why that happened. But I think at this point, these results aren't too concerning. They talk about the business drivers in sort of different parts of their business. So payments volume was up 11%, but cross-border volume, excluding Europe, was down 21%, and then when you put Europe back into that cross-border volume, that was about down 11% year over year. So that is not good to see, but obviously travel is still not completely back to normal, I would say. So that's fine to see. Hopefully we'll see some better increases this quarter, and processed transactions were up 8%. And also, just taking a brief look at the balance sheet, we can see this is actually from the end of 2020, or September of 2020, when they released their last 10K report. So total current assets around $27 billion, and total current liabilities are around $14.5 billion there. So almost double the amount of current assets as current liabilities. So that's really promising to see. Total liabilities only $44 billion, and they only have $21 billion of long-term debt, which is really not that much at all considering their market cap, and then $80 billion there of total assets. So balance sheet wise, I think they look super strong. And we're going to take a look at the dividends as well. That's sort of an area you could argue they're weak and strong because they have this super low yield right here of 0.51%, which is only an annual payout of $1.28. But the good things there are they do have a super low payout ratio at 22%, and they have a super great dividend growth rate for the last 5 years of around 18.5%, which is fantastic. Realistically, that's probably not going to continue for the next 20 years, but that's still a pretty good growth rate. If it can continue for even a few years, then buying now would you would be rewarded greatly for that in the form of the dividend growth. And they have been growing that dividend for 12 years. They are a technology company. We'll talk about that a little bit more later, whether they are or are not a technology company. But generally their business model has been made possible, I guess, because of technology and this new technology we're seeing. So I would consider that technology. But the bottom line is that's sort of why they haven't been growing the dividend as long, just because there were a bit more of a new company 12 years ago. So they probably weren't well established before that to be paying much of a dividend. Also exciting to see is that their dividend declare date listed here is April 23rd, which is about 3 months ago. So they should be declaring a dividend any day now. And if we look at the dividend history to see when they should be raising it, we can see that they usually raise it in the fourth quarter. So they probably will not raise it this quarter, or it'll probably be the next quarter. So that's just exciting to see that they're probably going to declare a dividend soon. And looking at the PE ratio, you can see, through 2015, 2017, 2018, they were trading, in the 30s, mid 30s to high 30s of PE ratio. And into 2019, they got a little bit higher, almost to 40 at some points. And then more recently, the past 6 months to a year, the PE ratio has climbed all the way up to 57.11. So that's pretty high, I think. And we'll compare it to the sector as a whole, but historically speaking, it's definitely a bit higher of a PE ratio. And you can see over the past couple quarters, their earnings have sort of fallen a little bit as well. So that's contributed to that PE ratio. So hopefully if they can grow the earnings pretty nicely the next quarter or two, then that PE ratio and their overall valuation would sort of go down a little bit. And sort of make them a little bit more reasonable, I think, even if the stock price continued to go up a little bit. And looking at the sector, the PE ratio for the sector, I just wanted to show this because some people would say they're in the technology sector, which I generally feel like they're a technology company. That's what their business is about, but it's also about payments and financial services. And if we just look at the three industries within the technology sector: software, hardware, and then semiconductors, to me Visa doesn't really fit very well in any of those categories. But if we look at the financial services sector, then we can see that there's these different industries in here, and there's diversified financial services, or sorry, there's credit services because they're a credit card company. So there's credit services, and that sounds to me like what Visa is. And if we look down here, it says right here that the average PE for the credit services industry is 8.29, and the average for the financial sector is 22.48. So that would make Visa, drastically overvalued compared to the rest of the sector and industry. But then if we click on credit services, we can see here, the different companies that they have listed in the credit services industry, and Visa is, number one by market cap, by weighting, and then MasterCard and PayPal, and then some other ones here. But the weird thing is that they have the average for the industry here listed at 18.66. So I'm thinking it's probably closer to 18.66. Some of these companies here that are listed have PE, like single digit PE ratios, but on a weighted scale, those holdings are very, very small compared to the size of Visa and MasterCard and PayPal. So I'm not exactly sure what the overall average for the industry is, but regardless of what it actually is, I can say that PayPal, Visa, MasterCard, they're all, overvalued compared to the other companies in that industry, but they are more, high tech and, on the leading edge of technology. So I think that, is some of the reason for that valuation that is a bit higher compared to those other companies. So right now I don't own Visa in my dividend portfolio. Like I said, I actually do own it in my M1 Finance portfolio that's more focused on growth stocks and just capital appreciation rather than dividends. But I would definitely consider adding it to my dividend portfolio, but I think I would like to see it, fall closer to that 200 level on the stock price. I think it's around 250 right now, and I just think that's much too overvalued. So I'd like to hear from you guys if you do own it, or what price you would want to be buying more at, because just to give me an idea and just some suggestions from the community. I always love to hear that. So let me know overall what you guys think of Visa, and I will see you in the next one.